Now, in the coming week, U.S. jobs numbers are expected to hold up reasonably well. Still, the lead indicators point to softer activity ahead, which could fuel expectations of an earlier rate cut. Now, in the Eurozone, markets will be watching unemployment and inflation data. Take a look at our next report for more.
Tariffs and trade talks will continue to make headlines as the deadline for Trump's import taxes pause comes closer. In a 4 July holiday-shortened week, Thursday is the key day for data. Financial markets are increasingly pricing in the prospect that the Federal Reserve will lower interest rates earlier. The bets are for the Fed to be more aggressive than previously thought if trade tensions continue to de-escalate. Previous bets were for around 0.5% of cuts in the second half, with 0.25% cuts favored in September and December. Now we are getting close to a 50% probability of a third, 0.25% cut before the year is out. Two Fed officials, Kevin Warsh and Michelle Bowman, are suggesting they could potentially vote for a rate cut in July, but most other officials are more conservative. They want to make sure that the price impact of tariffs is only a short-term phenomenon. However, the Fed has a dual mandate. They target inflation at 2%, but also are obliged to maximize employment. This week's jobs numbers are expected to hold up reasonably well, with around 100,000 jobs added. But lead indicators such as business employment surveys, job vacancy numbers, and rising jobless claims suggest that July through to September is a critical period that could see much softer data. On the other side of the Atlantic, price growth in the Eurozone has been very benign in recent months. This has prompted the European Central Bank to lower rates to 2%. Expectations are that inflation will continue to hover around 2% for the months ahead on the back of sluggish economic activity. For June, though, higher oil prices have translated into a slight tick-up in prices at the pump. The latest services inflation data from May were also disproportionately weak, so a slight increase seems to be in the making. Unemployment continues to trend at record lows for the moment, despite weakness in northern Eurozone labor markets. The South is picking up the slack with declining unemployment in Spain, Italy, Greece, and Portugal. Expect continued strong labor demand in the South to keep unemployment rates in the low 6% range. That is despite the softness in northern Eurozone markets. Business Bureau, WION, World is One,